Hi ladies and gentlemen, this is Game of Trades, and this could be the last video I make before the markets begin their move down. Now, as most of you know, I have been very bearish about this entire rally we've seen from the lows. I've been very skeptical not only from a technical standpoint, but also obviously from a fundamental standpoint, considering the current situation. And that's obviously something I've been talking about extensively over the past 2 weeks. Now, that being said, we are above support. We are above this 272 level, which is extremely tough support. And so I think it is unwise to short being above such an important support level. Do I think there is limited upside? Absolutely. Do I think there is great opportunity to the downside? Again, absolutely. But again, I've been very clear about this on this channel, and we are currently in an uptrend. We're making a series of higher lows and higher highs, and we have absolutely no sell signal so far. So shorting the market without a sell signal and while being on an uptrend is definitely not my style of trading. We tried to short the market once here with the rejection of the downtrend line. Obviously, we got stopped out, and we've been looking for a re-entry ever since. Now, if you are a risky trader, you can definitely look for a nice opportunity here at the 285 level. This is very tough support. This is clearly a very important level that the bulls will have a hard time breaking. However, the trade setup that I'm currently looking at would be a break of the 272 level right here. This is a very important level that the bulls absolutely need to defend. If they don't defend this 272 level, we'll likely see panic selling down to lower levels. And the very interesting thing about this 272 level right now is that it coincides perfectly with this 11-year bull market uptrend line. And I'm going to show you on the weekly chart exactly what it is. I've been talking about this a long time on this channel. This is the trend line that I'm talking about. This is what has been holding this 11-year bull market. Now, obviously, making a video like this, making the case for a trade setup to the short side is risky considering the uptrend, considering the powerful uptrend that we're currently seeing. So don't hesitate to drop a like to show some support for the channel. It would be greatly appreciated. Now, going back to the daily chart, you can see how this looks very much like a bull trap. Again, this is something I've been talking about. A lot of people are thinking that we are popping back above this 11-year bull market trend line to continue the bull market and head on to all-time highs, thinking that this was just a bear trap and that we're in fact heading higher. Now, if we start reversing where we are now and we start breaking below the 272 level and this bull market uptrend line, those people who thought this was a bear trap will quickly sell their position as we're breaking back below this uptrend line. And so that's likely to cause a lot of panic selling as we break below these two important levels. Now, if we begin to reverse off here, now again, that's not 100%. Nothing is 100% in the market. We could definitely head on higher. It's absolutely not my favorite scenario, but it could happen. This is why I'm waiting for a sell signal. But if we reverse here, everything that I've been talking about for the past 2 weeks now would be playing out. I talked about the fact that we would break this downtrend line if we were to see a bull trap, which has been the case so far. We also talked about the MACD crossover that would also happen, and the pop of the bull market uptrend line, just like we saw in 2008. Now, another thing that we would likely see is a beautiful backtest of the MACD zero line. And I've talked about this many times on my channel. The zero line on the MACD acts as support when tested from above and as resistance when tested from below. And right now you can see we are testing it from below. And this is a very powerful indicator to define whether you are in an uptrend or in a downtrend. As long as you are above, you're in an uptrend. And as long as you're below the zero line, you're in a downtrend. And we can see that in 2018, right here during this stock market crash, we had the first leg down in the markets. We popped below the zero line on the MACD, you can see. And then we had two back tests of the zero line right here. They're not perfect back tests, but they are back tests. and then we had the final leg down after the backtest was successful and the bearish trend was confirmed. And so back to 2020, that would look something like this. We'd likely reverse and go down, and it would look something like this. Now, obviously, we don't have to have the big leg down straight away. We could have something like in 2018 where we had ups and downs for a couple times. But that's not the scenario that I favor. I actually do favor a leg down, a powerful leg down straight away, simply because of this bull trap scenario that's playing out right now. Again, when we start to come back down below these important levels, the panic selling will start coming in. And with the current situation, with unemployment and the economic shutdown, the selling will get more and more aggressive as we go down to this level. And you can see the RSI here, which is an indicator which gives oversold and overbought readings. You can see we clearly worked off the oversold readings that we had back here. We were oversold throughout this entire leg down. So now we have a room to work off of to get back into oversold territory if we were to see another leg down. So this could potentially be a very profitable trade. Now I'm going to cover the monthly chart, and I'm going to show you guys something that I haven't talked about on this channel in a while. Now I cleared the entire chart so you can see exactly what I'm about to show you, and that is the MACD histogram here. You can see we're starting to print a couple of red candles here, and this is one of the things that I use to identify longer term trends. The histogram basically tells you the space difference between these two lines on the MACD. The MACD is composed of a quicker moving average and a slower moving average. And so this histogram makes it easy for us to see the momentum that we're currently seeing on the monthly chart. Now, obviously, it does have its whipsaw signals. You can see here in 2018, we did have red candles, but the indicator failed to tell us effectively when to get in and out of this situation. It was too slow for the 2018 crash. However, in 2015, 2014, you can see here we started having the first red candles, so you would have exited out right at the top. And here we had the first green candles, so you would have bought back in right when the bull market started again. So it made you essentially sidestep this entire consolidation range. And the same thing applies to 2008. We saw the first red candle right here. This was right at the top of the bear market, so you could get out of your long-term positions on the SP 500 right here. And then it turned green, it turned bullish right here. And so you would have captured almost the entire bull market. And again, same thing with 2000. You would have sidestepped this entire 2-year bear market. And what we're currently seeing in 2020 is another red candle, bigger and more significant than the one that we saw in 2018. Now, obviously, it could again be another whipsaw signal, or as I've discussed over the past few weeks, it could be the real deal. Now, you have to remember that this is a very long-term indicator, and the longer term the indicator, the slower it will be at giving you that sell signal, and the slower it will be at getting you back into the market when the time is needed. And so I would not use this indicator if you really want a precise and accurate picture of what's going on in the market right now. That being said, it does absolutely have an influence on the technical damage done to the chart. This is used by long-term investors. This is used by 401k investors who want to be in the market when it's going up and who want to sidestep periods of economic contraction or economic stagnation. And this is no secret. This has been in use for a very, very long time. So I'm going to end the video with that and leave you guys to think about this. Don't hesitate to drop a comment below to tell me what you guys think. Make sure to like and subscribe if you enjoyed the video. In the meantime, good luck on your trading and see you next time.